Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel O'Connor.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel O'Connor and Dennis Dick on the show today. We can talk about GE. Maybe we can talk about some more Tesla follow-through. We got Barracuda. We got some movers. I don't know if you guys saw that crazy Dow Jones headline from yesterday at around 9:35 about Google buying Apple. A loss it was not meant to be, but that caused for a fun blip on the screen. So maybe we'll talk about that as well. We'll, of course, take your questions in the chat and cover what's new in ratings land this morning. Our guest today is at 8:35, Greg Harmon. He's the founder of Dragonfly Capital Management. He's also the author of the book Trading Options, Using Technical Analysis to Design Winning Trades. Joel, what's doing in the S&Ps?
We are trading in the red here by 350 at 25.45 even. A little bit of a 5-point range here. Finding resistance just under the all-time closing high, which is 25.50. Our high is 49.75. On the downside, 25.40 area. We've had two lows there. That's key to continued downside. Crude unchanged here at 50.92. We were trading well into the 51 handle, 51.42, but back near the lows in the session. See what can happen in the crude market today. Gold and silver, both in the red. Gold down by 8 cents at $12.93, but still knocking on the door at $1,300. Silver down by a couple pennies too at $17.18.5, just hanging above the $17 level. Good morning to you, Dennis. How you doing?
This is my afternoon, actually.
Are you in a better mood than you were yesterday? Because you were in a really...
I'm in a bad mood again because I could not sleep last night. 2:45, I wake up and I'm just not tired. And I'm lying and tossing and turning in bed. So finally at 3:45, I was like, okay, may as well just get up, trade the 4 a.m. open on some of these, equities there and stocks and see what's going on. And there's nothing going on at 4 a.m. I haven't got up at 4 a.m. for a while to trade the markets because, it's often when you get some volatility in the markets, sometimes there's some opportunities at 4 a.m. There is nothing. Like I'm telling you, there's on the exchanges, there's only like 20 trades that happen on the 4 a.m. open out of like 6,000 stocks. I mean, there is nothing going on at 4 a.m. And then I was like, well, I'm going to try to go lay back down, toss and turn. Finally, I get back up at 5, and I was like, okay, I'm just going to sit down, I'll go through the earnings, wait for the earnings to come on Delta, wait for BlackRock. So I've basically been up for 5 hours already.
And if you were trading the S&P 500 futures, then you would have stuff to trade. You wouldn't have to wait for that 4 o'clock.
A 1-2 point move.
It's actually been a 4-point move. But
we got a 4-point move. Holy cow, I can't handle all this volatility.
Dennis, I'm willing to give up an edge here, okay, because we're trading down. Oh, I have to do this basis the SPY, right? Okay. I'm willing. Now, I'm still down 2 steak dinners, right?
Yes, you're down 2 steak dinners and I think 3 lunches.
No. We're flat on the lunches, and you know that. So
you both those 2 steak dinners for like 3 years too, by the way.
Well, I did pay one. Okay, so you come over here. All right. So the SPY, I'm willing to give up an edge right here because we're trading down 38 cents at 254.24, and I'll even give up like even more of an edge, and I will take 249, and you can have 259.
This is a long range bet.
Yeah.
Here. But we could be in this bet for 2 years the way this market moves. Five points on the spots, 50 points on the S&P. I don't know. That's almost too long for me to even remember because the problem is I'll forget about the bet. You'll remind me if I lose the bet, and you won't remind me if I win the bet. So I think I'm a heads you win, tails you win on this one because I won't remember that bet. It's too long, Joel. You got to give me something closer.
All right, now forget it. Instead, I want to know why Heliath and Matheson is going up so much. I know everyone's talking
HMNY.
about
It's in my filter every day. So, and I never even look at it, but in my up filter, it's pretty much in there every day. It's just in my crazy filter. Like I have a volume filter too, and this thing has already traded 274,000 shares. It's probably something you could have traded at 4 a.m. here this morning. Wild child. These things happen. There's always a stock that's doing this. It's, it went from $2.46 a month ago. It's now $32, talking about a stock that's up over 1,000%. Where it stops, nobody knows. All I can tell you is eventually these things usually end ugly, but who knows where the top is on this thing.
I mean, this is one of the most mysterious moves because it was basically at $2 and change in the middle of September. And then someone got the memo that it was going to be moving in October because it blasted off. And the only relevant news that I could see is on October 5th, Heliath and Matheson shares spiking higher in sympathy to Netflix news of subscription price raises for middle and top tier firms. So are they they're in analytics? Are they someone please put me Movie Pass, Ace is saying, to look at their Twitter logo or website. That's it, because they have a Movie Pass. But you know what? If I look at like movie stocks, they're absolutely getting killed. Is everyone using this Movie Pass? I don't know.
Maybe this is the new Netflix, the new exciting thing.
That's the new Netflix.
You know what this looks like? This looks like that VERI chart before Citron.
This is going to get Citron.
You wonder if, Andrew Left isn't licking his chops on something like this right now, HMNY. And, this could be, one of those that Andrew Left could come out on eventually and harpoon. So some of those are the little ones you got to watch, obviously. But, these things take off and they can continue to take off. I'm not coming in here and shorting this thing. I'm not coming in here and buying this thing. This thing is, exact opposite of the kind of stocks I like to trade. I do this for a career. I'm not doing this to gamble. And stocks like this, and I know, Ace, you trade these things all the time, and there's certain people that like and do well at this action. I'll tell you, 95% of traders, maybe 99% of traders, will have a lot of difficulty trading something like this. This is a hard thing to trade when stocks are moving around 10, 20, 30% a day. High risk, high return. So yeah, you can get it right. You can make a lot of money on it in a hurry. But I'll tell you, at the end of the day, the majority of traders lose money trading this type of stuff.
And this is real. It's HMNY, right? So I'm looking in my pro, and I see the last earnings report in January of 2014 when they made 3 cents on $3.23 million of revenue. So I don't know. I mean, there's got to be some more information on it. I just want to know. I mean, I'm not buying it. Are there options on it? Because I would.
Well, we have precedents here, though. Like, look at what this thing did back in 2016. It went from $1 to 17. Then it went back to $2. So now we went from $2 to 28, 32. I don't know. I think, when the dust settles here 6 months later, this thing's probably back a single digit stock. But the borrow is probably expensive. We've got Cajun One saying it is. So even if you short it up here and you're saying I'm going to hold it, I mean, who knows, first of all, how much heat you're going to have to take. Second, how much borrow fees are you going to have to pay? And if you're buying these types of things, if you're coming in and buying this thing at $32 after it's up 1,000%, so 1,000%, I can't even talk. You're late to the party. I mean, this is the exact definition of chasing. Something that I learned in my first year of trading back in 1999. When I first started trading at Bright, this is what I was doing wrong. That whole first 6 months that I was losing money as a professional, I would chase everything. I would jump in here. I would chase on this. Oh, this is moving. I'd go get in this. I'd go in this. That's how, that's how I was losing money. And I learned the hard way. Chasing stocks is a very difficult game to do. It's worked here for the last little while in a lot of issues because we've been in a straight up market. But markets don't continue like that forever. HMNY eventually will have its VERI moment. Whether that's Citron coming out or whether it's an analyst speak or whether it's just a collapse. This is what these things do. They go up, 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 and then they fall 50% one day or 50% in 10 minutes. And then you're like, uh-oh, what do I do now? Well, what do you do now? You're probably never going to get back to those highs. So where that top is, who knows? 32.50 could be $50. It could be $70. You know what? It could be $15 here too. Risk is just out of, it's too much for me on stuff like this. I learned the hard way. And that's why, I've been in business 18 years, not trading this type of stuff.
All right. So let's get to some news stocks. What's moving today?
All right. Always stocks moving. So we've had Let's jump into the earnings reports. The big one from this morning is Delta Airlines, DAL. The airlines have been flying. We were talking about them for the last week and a half on the show. DAL, I was up yesterday ahead of the report. It's up again today. Spencer, give us the numbers.
Yep, Delta Airlines reporting EPS for the third quarter of $1.57 versus $1.60. They missed it by 3 cents. Sales of $11.06 billion.
And Delta getting a nice lift in the pre-market. Not as much as you'd think, but it's ran up into the report. I mean, we were $48 a week and a half ago. Now we're 54. So now you feel like, okay, well, expectations a little bit higher here. Good numbers, but it's only up 1.5% here. And I'm cautious because you're starting to get back into the area where we found resistance back in July. I mean, these things were absolutely hated a month ago. Now they're approaching, if you look at Delta, this thing's approaching a new all-time high here. I'm not buying it up here because, again, I'd be chasing it.
Pre-market high, 54.40. That coincides very nicely with a pair of highs that Dennis mentioned in July. So I'd be keeping an eye on that. If, in fact, it can get through there, there's no exact number at 55, but 55.39 was your high on the 14. So you got to figure there's some paper stacking up at 55. 55.75 is your all-time high. I don't know. I missed the move on this on the long side. Doesn't mean you have to short it. Keep an eye on that pre-market high.
All the airlines up in sympathy. American Airlines, AAL, LUV is up as well. SAVE, SAVE is up as well. So we've got a lot of airlines trading up in sympathy with the move here in Delta. JetBlue, did I get them all? UAL, I think, is up here as well. So all of them trading up 1 to 2% here in sympathy. Other earnings report we also had was BlackRock this morning. Again, a good report. Again, the same story here. Stock has run up ahead of the report. So I'm not surprised that's actually showing some weakness. And that's something to keep in mind when we go to these, bank earnings here is remember last earnings report or last earnings season when the banks started reporting, they were fairly strong ahead of the reports. They all sold off on good reports. So if you run up ahead of the report, like BlackRock has run up 30 points in the last 2 weeks, basically 7-8% ahead of the report, the numbers absolutely have to blow it away for the stock to go higher. If they don't, they come in line, it's going down. They beat by a little bit, it's probably going down. If they miss, it's going down. If they blow it away, it's going up. So, 4 scenarios there. 3 out of 4, the stock goes down. 1 out of 4, it goes up if they blow it away. So I haven't even looked at the numbers here for BlackRock. Spencer, give them to us.
Well, before I say them, what do you think it did?
They beat.
I don't think it blew it away.
All right, $5.92 was the EPS. $5.56 was the
it
estimate.
Did blow it away. It didn't even matter. All 4 scenarios it's going down.
Sales of $3.23 billion versus $3.09. So beat on both. Pretty big beat on the EPS. Not as big a beat on the.
Did they give guidance?
Not that I'm seeing yet, or I just haven't seen it yet.
Okay, so here's a scenario where they actually blow it away, kind of blow it away. I would say 40-50 cents is a blow away. Still not good enough. And that goes to show you when these stocks run up ahead of the earnings report, hard to be long ahead of them because usually they give some back. And, in some cases, they can continue to go if they do blow it away. In this case, they kind of did blow it away, and it's still not good enough.
It's hard to pick support in this thing after this kind of run up, but the resistance is so well defined here. Dennis, if it gets in, it's in the 465 handle right now, right? Well, listen, this is your last 4 highs, 65, 61, 65, 87, 65, 81, and 65, 49. So there it is. You want to play the breakout above 466, go ahead, but you got a quad top in there you're dealing with. So even if it gets above it, let's see it close below it. Well, you're not even going to get a shot. We just traded 63.03. So
it's widespread though. It's still figuring out. It's only traded 3,000 shares. So
we shouldn't even
real liquidity.
We shouldn't even cover $400 stocks. I mean,
they're hard to trade.
I mean, they're impossible.
Everything we talked about this morning here is hard stuff to trade. The HMNY, the $400 stocks. These are hard to trade. The airlines I like trading. Why? Because I have hedges. So, you can look Delta, UAL, LEV, they all kind of move together. And sometimes even when you can get in trouble, you can maybe grab another one of the stocks to help you out. Like if you're wrong on a call on an airline right off the hop, if you're quick, you might be able to grab another one before it's ran. So same thing with the financials. I always like to have hedges, stocks in the same industries here. Well, $400 stock, BlackRock, there's nothing, you can say, okay, it's a financial, it's going to move with other financials, but it's kind of its own animal too, biggest asset manager in the world. And then you look at, a stock like HMNY. There's absolutely no hedges for something like that. You're totally on your own. Doesn't matter what the market does. Doesn't matter anything else. It's just doing what it wants to do, trading all on momentum and all on, obviously, sentiment. And if the sentiment turns towards it, it'll start to go down. But that's, that's why I like trading stuff like the airlines or stuff that's got hedges, because there's opportunities there with sympathy plays. And that's where, edges come in my opinion.
All right, Todd, let's take a look. The airlines will be moving today. Oil probably won't be much of a factor in that, but look at your leader. Delta Airlines will be your leader today in the airline stocks.
Fastenal reported earnings here. I wanted to sell this short this morning. It was trading up in the 45 handle after the report. The report wasn't that great, and I was like, man, it's run up in the report. I should short it, but it was so widespread. It was like 45 to 47, and a couple hundred shares are trading. You're like, well, what if I miss something? And you're looking at it, and now I look at it, and it's down $1.50 from where I was looking to short it. So disappointed here. Give us the results here for FAST, the nuts and bolts of this market. Well, the nuts and bolts of the construction industry.
Q3 EPS of 50 cents. That was the estimate. Sales of 1.13 versus $1.12 billion. So a slight beat. Again, they beat it and they met, but in this market, not enough.
Not enough here. And I would say, they probably wanted a handy beat, and you're down $1 here, and I think probably deserved because it wasn't good enough. So in here you've run up from 40 to 46 into the report, give it back somewhat to 44. This was a stock that was on my radar to buy at 40. It actually got there in August. I didn't buy it. I should have. There's always stocks on my radar, and I got to maybe just sit the orders out there, but I hate sitting orders out there. But, maybe I should just start sitting them out there because I wanted to own this at 40, and it would have been good. Went up to 46. Comes back down the 40 area. I love it down there, but I don't think you're getting a shot down there anytime soon.
Yeah, only a dime off the pre-market low. I see a low at 43.76. That was back on September 25th. So take that out. I'm looking for the lower 43s here. Actually, you had a low right at 43 even, I believe, right on the nose. Nope, 42.97 on the 12. So it looks like we got some more downside here in Fastenal. Coming back on the upside, I'm sure a lot of people would love to see that closing price of 44.86, but pressure right now on Fastenal.
Dr. J has a couple of stocks to talk about. One that's on my list to talk about as well is Micron. Yeah, how often do you see this, Joel? You often see secondaries from biotechs. You don't often see them from the tech stocks. And here's Micron. Stocks just had an incredible run, and they're selling high. They're like, okay, well, we're going to take in, and we're going to, have another billion shares we're going to sell. And I guess, they're taking advantage of their high share price to raise some cash. Don't know what they're going to do with that cash, but they always punch the stock on the secondaries. This thing actually got under $40 last night. I haven't seen a pricing go by on it yet, but I believe it's 1 billion shares, isn't it, Spencer? Or $1 billion worth. But not 1 billion shares. $1 billion worth?
It's 500 and it's half a million shares of
500,000 shares. I think $1 billion worth. So I'm saying it wrong. So $1 billion worth of shares. So if it's 500,000 shares times 40, it's about $1 billion.
Okay.
So half a million shares here.
Could you?
Is that right? Or did I do the
No. You're doing it's 20.4 million dollars is what?
No. That's nanotechnology.
I'm sorry.
Holy cow!
I'm sorry.
Micron. What is Micron's offering? How much?
Let me look real quick. Their offering was 222. Yeah, 1 billion. You're right. 1 billion. You're right there. You're right.
$1 billion.
1 billion. I was reading the wrong headline. My apologies.
Well, they're hitting it down here, and it was down under $40. It's come back a long ways. I mean, there's just underneath demand and something like this. So I'm not surprised this thing's going to bounce back up. Everybody wants to own these stocks all of a sudden. They hate them at $10-12. They love them here at 42. I feel like it's wacky world for me, but MU has been on an incredible run. The market loves it still.
All right, we got a pre-market low just under 39.80. This has been a big run. If I was trying, I don't even know what the price is. So once we get the price,
I don't know what they've given it.
Yeah, I'd say target on the downside, maybe today 38. I'd see a low just under 38.
38?
Yeah.
I'll buy this thing at 40. 38? You think we're going to get to $38 on Micron? MU?
I think
41.
I think that's where they're going to price the secondary.
I think they're going to price it at 40 and a half. They're not going to price it that low. They know they've got liquidity on this thing. I'd be shocked if the price is under 40. Absolutely shocked. You often see these secondaries, and especially on the biotechs, they price, it depends. but I would be shocked if it was under 40. And the market's rallying now. What was the low after hours?
Boom. After hours low in Micron was listed under 39.80. It looks like it was, it doesn't even pull it up here, 39.75. That's your.
We're on the comeback trail. We're already up a buck from there because they overshot last night. It could be 40. I would be shocked if it's anything under 40. So that's where I'm going. So I'll go a lunch bet on that, Joel. I would say the secondary is above, at least at $40 or above the pricing on it.
Well, I guess I wouldn't buy it. 40.50.
I'm saying it's above 40. So the 38, I'm hitting you on that one.
Okay, and I'll
buy the stock for you all day long at 38 and 39.
Okay, 40.50. I'll go up on that.
So 40.50 is
yeah. I don't think they're going to get people to buy this thing.
They will. There's this underneath them, and they'll get people at 40.50 too. So it's this stock is just hot right now. And you know what? It's smart by the company.
Of course.
Like you can say, oh, you know, you can say, oh, well, I guess harpoon's the word today. They harpooned the longs who bought this thing yesterday at 42, but it's smart. They're selling their stock high. I mean, you know, so many companies do it backwards, and they, you know, do buybacks right now when the stock is all-time highs. Well, here's a company that's raising cash because their stock is high. I love that. You know, it's actually smart of the company here. So this is good management. It's a good management decision. I think they should reward the company for this. Although I still say, you know, Micron's had a hell of a run. I'm not buying it for my own account up here, but I think they easily find buyers in the 40s on a secondary on this.
All right. We'll just see what happens. We'll wait for the price to come out. No lunch bet.
Okay, moving on. So when we're all wound up here this morning, everybody's angry, it seems like. Let's look here at the ratings land. There's some big ones in ratings land here. Johnson & Johnson, PayPal, Abby. Spencer, give us some details, and Joel runs through some charts.
Well, let's start with the Johnson & Johnson one. So they get upgraded this morning at Jefferies from hold to buy.
And this is the second upgrade in what, 2 days, Joel? We had who upgraded on Monday?
We had an upgrade on Monday from Wells Fargo, and that was actually the first activity. Then we had at the end of September, we had Goldman Sachs downgrading Johnson & Johnson from neutral to sell.
Yeah.
So
can you believe that? Goldman nicked that thing, and now it's coming all the way back. It's an interesting chart. Pre-market high, 134.70. Folks, here's your level. You got to get well into the 135 handle. 135.77, 135.79. That was your high back on 18th and 19th of September. I don't know if we're going to see that, though, today.
You're running into a lot of trouble up there too. So, you know, here's a second upgrade. When we get the 4, we know that's always the top, right, Joel? Isn't it when we get 4 upgrades within a week? That's always the top. So we've had 2. So watch out. If we get a couple more, that'll propel us up to that 136, 137 area. And then we can sell it short. Johnson & Johnson's been an incredible performer here for a long time too. I don't know. I'm not buying it up here. I feel like the valuation's too lofty for me. I haven't been buying much of my investment portfolio lately. Just valuations are stretched on so many stocks. It's tough. It's a tough investing environment just to come in with new positions. If you've been in them, great. But if you have some cash on the sidelines, I feel like you're coming in with cash now. It's kind of late on a lot of these issues. Here's one that I own in my investment portfolio. I'm happy about it. I'm actually long into my investment portfolio. I'm actually long into my trading portfolio too. And I'm bullish this stock. So I agree with Cowan. It's AbbVie, ABBV, getting an upgrade at Cowan here today. Spencer, give us the details. Price target?
Upgrade at Cowan from market perform to outperform. I'm still tracking down the notes. So I haven't seen a price target yet, but when I do see it, I will let you know. As far as recent upgrades or ratings to the stock, there was a couple last week. We had Leerink maintaining an outperform, and actually just the one. Leerink maintaining an outperform was the most recent rating on AbbVie.
So stock breaking out. This is, I believe, all-time highs on AbbVie. I've owned this thing, I've said before, since it spun off from Abbott. So I've had it every single day it's been out. I still own it. I'm sticking with it. This is the one stock in my portfolio. It's done really well. One of the growth stocks I got, one of the biotechs, and I like it. I like the story still.
Yeah, I mean, you got your resistance there. Maybe you could take it out, but you've had 3 highs in the same area. We are trading above it, so we'll use 91.20 as support. Pre-market high, not a lot of trading going on. I see a 92 print. But you could see, let's see if actually that old resistance acts as new support. Just no reference point on the upside. Maybe if you really think this thing's opening this low of the day and keep on going, look at your average daily range. Good support at 90 if it happens to go into reverse.
New all-time high for PayPal upgrade at Morgan Stanley today. Stock trading up at 90, or not at 90. I'm looking at the average chart. It's trading up at 66.90. That's where I was getting the 90 from. 66.90. It's kiss 67 here. These are tough, Joe. They're all-time highs.
Yeah, what do? I mean, you can't really short them. 66.90 is your last print. I mean, you did have a seller there at 66.50 area. Now that acts as support. I mean, look at it. It's gone up. I don't know. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 months in a row here in PayPal. So pre-market high 67.04. That's what we're keeping an eye on.
Jumping over here to Juniper. Juniper getting downgraded at Bank of America here this morning. It's trading down 2% in the pre-market. Got hit 2 days ago. They're hitting it harder here. One level I'll keep an eye on is 26.50. That was the low from September the 8th. Not sure if you get there today. If you do get down there, though, I think it could bounce.
Juniper, JNPR, did have a double bottom in 27.25. We did take that out. Let's see how it's trading. 26.75, great level, Dennis. You picked out that low of the move. It's going to be coming down here very quickly since we were at 20, almost 29 4 days ago. So looking for a bounce at 26.5. Not only is it the low, you had a 26.92. So that was the low in August, so we'll keep an eye on that.
Credit Suisse note on FANG, basically. They have upped their price target on Facebook. They're upping it on Amazon. They're upping it on, I think, Netflix. Did they give any target on Google too, Spencer, Credit Suisse note?
On Google? I haven't seen anything come through on,
on
Google today.
Did you see the Credit Suisse note where they increased their price targets on a whole bunch of tech stocks?
I saw the existence of the note. I'm still tracking down the actual note itself, but when I do get it and I have the thing, I will butt in.
Okay, so Facebook, I saw a price target up on Facebook. I saw a price target up, I believe, on Amazon. I saw it up on Netflix as well. I don't know if they said anything about Google, but just interesting that they said FAN. So I see Google trading higher here too. So you're getting propelled here on all those stocks this morning. I think Credit Suisse is the one that's helping it out. They also came out with Snap, and they put a higher price target on Snap as well. I believe raising the price target from 17 to 20 bucks. Was that what that was? Yeah, that was Credit Suisse. So, and it's up 3% as well here. Joel, let's talk FANG, and then let's talk Snap.
I mean, these guys are brave upgrading these and price targets at these levels. But, man, as far as buying high or buying low and selling high, they're not employing that at all. 175.49 is your all-time high in Facebook. What are we doing in the pre-market? Not even near there. And I remember this thing on earnings day traded up to 179 because I can remember seeing those prints go up. But, I mean, not chasing here, 175.49. Amazon, AMZN. I think that's running into problems here. Look at that $1,000 level, AMZN. Came back, had a nice rally. We hit 1,000, or we hit 98.50.
On the kisser,
yeah,
almost.
look at that. 1,000's the big level in that. Netflix, I should have taken you and Jeremy's bets when you thought it was going over 200.
It did. It got within 60 cents.
I know. And look at that. So that's a big psychological level. And then also, what else do we have here? In Google, I mean, they're knocking on the door here. I mean, the all-time high in the Goog is 988.25. So those are just the levels, to keep on if you're looking for targets on the upside off these price target raises or upgrades or whatever they were.
And then Snap, SNAP, raising their price target from 17 to 20. Stock is trading up 2.5% in the pre-market. What do you think of this one? Here's a stock, had the big run up. I sold the low. I went on the record book saying I sold the 1128 low in SNAP, and that was the absolute low. 1580. The high there. It's come in, 50%. It came in more than 50%. Now it's just consolidating quietly above 14. Gets, some positive commentary from Credit Suisse here and raising the price target. What are your thoughts here? It's safe to jump in the Snapster?
There was a couple days ago where you shorted this off a downgrade, and it really wasn't going down. I think you probably ended up it was probably on the 5th, and it made that low at 14.10. I mean, quiet consolidation here. I think if it clears 15, but I'd look at it on the long side. It's up 41 cents. So I definitely wouldn't chase it here, but longer term up over 15, holds 15, has a chance to rally. And I know you were a little shocked when I said this could someday do a 50% retracement, right? We had a 16-point move down, take half of that 8, that takes it back up to 2021, but got to clear $15 first on that.
GE bouncing all over the place here this morning. JP Morgan lowering their price target down to $20 on it. And the stock is down about 0.5% here right now. I still own this in my investment portfolio. Again, this has been one of my dogs in my portfolio, I'll tell you that. And markets are at all-time highs. This is one that stands out. Like I said, I got almost 100 stocks in there. I think I'm probably only down about 10 or 12 of them because, the market's at all-time highs. So not really, that's not really anything to say about my portfolio performance here. It's just saying that stocks are all-time highs. Most of the stocks in your portfolio, if you're a long-only portfolio, are probably going to be doing well. GE is not one of them. So GE has been a dog. I've had it in my portfolio for 17 years. I think I'm sticking with it, but I don't even know anymore. I mean, if they cut the dividend, like we were talking on the pre-market show, it's 4.13% now. Everybody's ganging up on it. I don't know if it's obviously been a bad call for me to stick with it this long because it's really not done great in the 17 years either. I don't know. I'm torn on GE. From a valuation perspective, it kind of starts to look cheap. Love the dividend, but is the dividend safe? Deutsche Bank doesn't think so. I'm not sure I think so anymore either.
Well, full disclosure, I did load up on some weekly 2350s after that.
Puts?
Yeah. Yep. That might be
the weeklies this week?
Yep.
Oh, yeah, longer out. Give yourself some time.
No, because I think it's going to 23 this week. So why would I mess around? I didn't go to the 23.
How much is the premium on those? I'm just curious. Setting up your risk return.
I started buying them at like 15 cents and they got all the way down to 10 cents. And now the intrinsic value should be at least 33, 34 here. It's a weird chart on this one, Dennis, because we got to go to the monthlies on this one because you had your flash crash low just under $20. And then after, that artificial pricing, right, you can really almost take this out of the chart. You had a double bottom at 23.25, and this was the 2 days after the flash crash. So this is what I'm looking at. 23.25 is my number. There's got to be some institutional size here at 23, right? Just because it's a nice whole number. But that's what I'm looking for. I'd like to see a 23 print in here. You got to figure there's some size in there. Pre-market low. Let's see. Pre-market low in GE is 2308, so it got pretty close. What time did JP Morgan do that, Dennis? Do you know? Do you have that?
No, I don't have it. Actually, I didn't even notice because I run a scan for the upgrades and the downgrades there. So I usually have those, but I don't think it was an actual downgrade. It was just somebody in the chat had mentioned that they lowered the price target. So I never did actually verify if that was the case. But who wasn't in the chat? Maybe they can speak up. I'll give you guys credit for it, who just mentioned that they lowered the price target from 20. But when it's down 1%, somebody said something, and so I'm assuming that's correct.
All right, keep it. I'd like to see it at 23. But another thing, I think Dr. J asked about this one. Yeah, if you want to buy it, at least wait for like a double bottom or something, or a triple bottom, for buyers really to step up. Right now, you don't have that. Yesterday's low, 332. Prior day's low, 3.25. So we'll see what happens. Also, it has earnings coming out and all the talk of dividend. But Deutsche Bank, they got this one right, Dennis. They've been pounding this thing.
They've been right.
They've been darn right on this one since $28, $29.
Fuzzy, that was Fuzzy that mentioned they lowered the price target 20. Thanks, Fuzzy. Appreciate that information. From ratings land, that's pretty much the bulk of the big ones. RRC got upgraded. There's a lot of other. Is there anything else jumping out to you, Spencer, you want to mention?
Bluebird Bio downgraded at Jeffries, and that was the only one we had missed. CL upgraded. Colgate upgraded at SunTrust from hold to buy, and that was it. As far as ones that jumped out to me. So 8:34 now. We're going to, or 8:35 actually. We're going to take our only break of the day. We're going to grab our guest. He's Greg Harmon. He's the founder of Dragonfly Capital Management, and we'll be right back with Greg. Greg.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Alconin, along with Dennis Dick and Spencer Israel, working the boards. And we have Greg Harmon on the line, founder of Dragonfly Capital Management, a veteran of more than 25 years in the market. Greg, how you doing today?
I'm doing great, Joel. Thanks for having me on.
And you're also a distinguished professor at Case Western University, right?
I don't know about distinguished, but I do teach there, yes.
And what course are you teaching?
I'm teaching a class in risk management, and it's specifically risk management for portfolio managers, looking at how to protect portfolios over events and over the life of the portfolio holding.
All right. Well, that's what a great segue here. So let's say I'm long a bunch of bank stocks here, right? And you got earnings coming up. Maybe we could just, if you want an individual stock to talk about, we can. I had the XLF here. Earnings, I mean, you never know the way the street's going to react to good reports or bad reports. So you're sitting on a bunch of XLF. What do you do going into these earnings reports?
Yeah, I think what's been interesting about the banks over the last few years is it's the presumption that they can report any number that they want for earnings. So they don't tend to move much anymore following earnings. And then all of a sudden, when you get that laid back feel, they start to move again. You're right. The XLF has been on the verge of breaking out for a while. Same thing with the regional index, the KRE. And the banking index, the KBE. And I'm sure a lot of people hold those as they've just moved in the last couple of weeks above key levels. What do you do with that? If you look at, you brought up the XLF, so let's look at that in particular. Trading at 26.37 as of last night's close. One way to protect against that is to go into the options market and buy some October 26 puts against that. If you want to cut the cost on that, maybe sell the 25 puts against that, creating a put spread. 25 seems like it's been a key level. So if we do get a breakdown, that might be a level to find support anyway. And by selling the downside puts, you cut your cost severely.
Greg, I just wanted to go back to something you just said about the banks, and we are coming into earnings season. I don't know, a lot of people do, and I can remember last earnings season that they actually reported pretty good numbers, and they did hit them on, and they hit the banks on almost all of them on those good reports there. What do you mean by like they can report, whatever they want? Like you're talking that there's just so much flex in how they report them that they can kind of make the numbers look how they want to make them look. Is that what you mean, or what do you mean?
Yeah,
by that?
The banks have a lot of reserves for legal battles, things like that, and they're starting to weed their way through those. But they can adjust a lot of numbers that sit in reserve buckets to make a number look good if they need to.
So maybe there's something behind that, because I just remember last report, or last earnings season, those banks really looking like pretty good earnings by getting hit on it. So, I think you might be onto something there, Greg. Just jump over here. What do you anticipate here just in the technical? So you talked XLF, but let's talk some of these individuals. Like, we're going to hear from JP Morgan coming up. We're going to hear from Citi coming up. These stocks have had pretty impressive runs here in the last month. I mean, JP Morgan's up 10%. Citigroup's up almost 10% as well in the last month. Is this too much too fast? Do you think that you should be cautious coming into these, or what are your thoughts here as we're going to get these earnings reports coming up?
Yeah, it's really interesting when you look at these in terms of short-term moves. With as you said, JP Morgan up 10% since the beginning of September. But if you look at it on a bit of a longer scale, it has been trading in a range between like 83 and 95 for nearly a year after rising after the election. So it's really just starting to break out of that range. So if you're more than just a one-day trader, if you can hold on for several months, this is a good opportunity to get on board with a major breakout. If you look at the Citibank as well, you see the same kind of thing. It's been more rising more rapidly than JP Morgan, not in that range, but it's still just retraced a fraction of what it lost in the financial crisis. Another one I'm looking at that I got into just a couple of weeks ago, maybe it was last week, Goldman Sachs, starting to move higher again too. And I think they all look good. But you're right, Spencer, you might see some retracement again for earnings because they've moved quick in the short term, but longer term, these all look good.
How do you come up with projections? Like, do you come up with price targets, Fibonacci extensions, do you anything like that? Or are you just more inclined to just move your stop up or buy some puts and get out on weakness instead of actually trying to pick a top?
Well, I don't try and pick a top, but I do look at technical patterns from many different perspectives, like Fibonacci's, like the traditional charting patterns, like cup and handles and things like that, to get an understanding of what the potential might be. But I'm not the kind of guy that once you hit that target, takes the money off the table right away. As you said, you can look at using options to protect. You can do what we call stock replacement, selling the stock and then buying options at the money to take some money off the table. If I've gotten into a trade through the options market initially, what I'll tend to do is if it hits a sticky area, or what might be a sticky area, would be to roll those options up. So taking some money out by raising them to a higher strike.
Moving on to the healthcare sector, been on a nice run. I don't know if you have individual issues that you want to look at, or what's the ETF for the health, man? I haven't looked at that in a long time. Is it?
Well, I mean, XLV is the broad one, but
yes.
What most people are focusing on is the biotech sector, the IBB. And the IBB has been rounding out of a bottom from a pullback that started at the middle of 2015, and has been just slowly churning higher and starting to accelerate now. So I think that's a good space as well. Individual names, one that hit my radar and I gave to clients this week was Pfizer, looking like it's ready to break out of a 2-year resistance level. And I've seen on social media streams that a lot of other people are following this one too.
And what about the precious metals here? Taking a hit in gold and silver, but starting to recover. Let's talk gold and silver markets.
Yeah, gold is an interesting one because it had looked like it was going to break out and continue higher, and then fell back for the last couple of weeks. But Friday was a very interesting day in gold. And, many people attributed it to North Korea rumblings again, and the reaction to that, as we saw an intraday reversal off of the 1262 level on gold very sharply. And I think a lot of people just wrote it off. But from a pure technical perspective, that was a key move. moving back higher, and it looked like it could be the sign of a reversal, printing what we call a hammer candle that Friday, and it was confirmed higher Monday and moved up again yesterday. But we may see more of that. Gold has been kind of a fickle one lately. What's been, I think, more dependable is copper.
Okay.
Copper started lower in September, found its footing in the middle of the month, and has been moving up ever since, and looks technically to be a bit stronger than gold.
Yeah, well, I'm one of those people that got shaken out last Friday in the gold. I was leaning on that couple lows at 1270, and so I cut it loose when I went through there, and then I look and it closed at 1278. So that just goes using your levels for more than one day. All right, we're going to throw a real tough stock at you here, and I know you're not long it, but Expert Analysis and General Electric here. The only way to put it is the street hates it here. Just made a pre-market low at 2309. We're trying to look for a fundamental reason. The analysts have walked this down. Just give us your take here on GE.
Technically, it looks like trash. If you pull back to a longer-term chart on it, looking back to even like 1999, we had a major high in the middle of 2000, in August 2000, fell back sharply, bounced to a lower high in October 2007, and now is falling back from a lower high again. It's almost like this is creating a very, very long-term descending triangle pattern, and you would say from that. A longer-term technical target would be a move back down to 6.
6?
Now, is it going to get to 6?
Did you hear that?
I'm not going to project that it's going to get to 6, but if you focus in a lot more closely, you've got a major support area right here at about 23, and if we get through that, you could get a lot lower.
A lot of air below here. Full disclosure, like I said, I own GE in my investment portfolio. Greg, I've had this since 1999 in my investment portfolio. It's been a long run. I've been everywhere, and the only thing
through the highs and the lows.
Yeah, I've been through this one for a long time, this General Electric, but I agree with you that from technical perspective, it doesn't look good at all. $6 was the financial crisis low, so there was a little bit of a reason for that. Everything was in trouble back in the financial crisis, but still, I'm not saying it can't go lower. If the dividend cuts cut, you never know on this thing either. Want to ask you about another stock that's been a dog for a long time, but actually showing a lot of life in the last year's Walmart. And if you look at the long term on Walmart here, we got up to just almost $91, $90.97 back in January of 2015. And then we sold off in 2015 all the way down to $56. Everybody said Amazon's, coming for them, and they're eating their lunch, and stock's in big trouble. And we've been straight up really since then here. Walmart's, finding a way to compete online with Amazon here. WMT, what are your thoughts on this one?
Yeah, this week is a major breakout in Walmart as well. My chart has a big red rectangle showing what has been a historically busy area of price in the stock between $72 and just over $80. So as you said, you dropped from 91 down to 55, just kind of cut right through that area. But on the move back higher, bounced off the bottom of it a little bit at first in September last year, and then moved back up into it in April this year, and it's kind of been stuck there until this week. I think it was actually yesterday, right, that it started moving. But we're out of that major area of past price history, and there's not a whole lot of price history now to the upside, and a very good technically looking chart. So, a retest of the all-time highs looks like it's in the cards, maybe more than that.
Is there any stocks you're balancing out your portfolio with the short? Any shorts on the radar?
No, I think the only thing that has looked like it's potentially ready to break down has been treasuries, so like the TLT, but keeps getting bought up when it hits a major level. So it's not moving fast. My perspective on the short side, I'm not a day trader, so I'm not looking for quick moves. And my perspective on the short side is that a lot of these moves happen quicker than I'm able to look at them, analyze them, and participate. So I focus more on the long side and just protecting the capital that I have.
Your take on Lululemon, Lulu. I know you mentioned retail just a little bit. Is Lululemon going to be one of the survivors here in the retail market?
It's going to be a survivor. I don't know. It's a messy chart, I think. We've got a series of lower highs and lower lows going on, although it's trying to break that string right now. It's also in one of those areas where it's had a lot of price activity from prior price action over the years. So for me, maybe it survives, maybe it breaks out, but it's not interesting to me until it's out of the 60 to 70 range. Above 70, it gets interesting to the upside. Below 60 to the downside.
For me, this is all about $64. You gapped down from that area. That was back in earlier in the year, and then you came up and you kissed it. Now you're kissing it again here. So 64, that looks like a huge level here in Lululemon. Well, thanks a lot. We've been on the line with Greg Harmon. He's the founder of Dragonfly Capital Management, and also a professor at Case Western University. Greg, great input. We hope to have you back on again soon.
Thanks. I'd love to come back, Joel. Thanks.
All right, S&P futures hanging out near, now just off the lows, 25.46.5. GE, 23.08 here, Dennis. Come on, Dennis. You the guy.
Should I sell? Should I just get out after 17 years? Should I just dump it here? That'll be the bottom. If I sell, that'll be the absolute bottom.
This is really interesting because we've had stocks, but I never think we've been on the show and I have been short a stock and you've been long it, and it's been going my way. I don't think that's. Maybe I need to reverse here, Dennis, based on your.
I don't know. This is one. I'm really torn on it. I mean, it's really been a dog. If they're talking about cutting the dividend, that's been one of the main reasons I've owned it all these years is for the dividend. So, that's a thought process here in my back. I analyze my portfolio. I go through it every few months. I really go through it here, and it's circled red. It's circled, and it's like, what's going on here? And it's been going down the whole time. Probably should have dumped at 29, 28, 27, 26, 25. I mean, hindsight's 20/20, right? But I've also been in it a long time, and I've been through hardships before in GE, and it's turned around. So I don't know. I'm probably sticking with it just because I've had it so long. And the one thing I'll say is, the one thing I do get in my investment portfolio is I hold things a long time. And it's not about just selling. The one thing as a lot of people do as a mistake is, they hold on to all their losers, and then they cut their winners all the time. So they're always taking their winners, hold on their losers, waiting for the price to come back. I would say 9 out of 10 investors do it that way. If you're going to hold your losers, you need to hold your winners too. So it's okay. I'm going to say right here on the show, in investment portfolio, it's actually okay to hold on to your losers. I always like cutting them. If you can cut them, great. But in a trading portfolio, absolutely need to cut your losers. If you're going to hold on to losers, you've got to hold on to your winners too, because if you're going to lose 50% or 80% or even 100% in some stocks, which I have before, I've held some stocks to bankruptcy. You need to have some stocks that are going to go up 100%, 200%, 300% to make up for it. So that's the one thing is you can't just be cutting your winners here, making, 5%, 5%, 5%, and then lose 50% on something, because that's a recipe for disaster. So one thing I do well is I hold on to my winners well in my portfolio. And if I start, always worrying about everything and, I might start trading my investment portfolio. And that's what I want to avoid doing, because I have been doing a little bit more of it lately. And I always do best in my investment portfolio when I don't look at it.
We got a question here. Larry Glickman's talking about Mankind. Have you seen this stock lately, Dennis? MNKD?
Yeah, John Najarian tweeted this at me there yesterday too, because we'd given some props in the Najarian brothers on our show, and John Najarian, I would just tweet out that Mankind was another one that they had been looking at the options flow on it, and I actually said, I'm like, the Najarian brothers must be doing great there, and John Najarian ended up sending me this MNKD. I believe Lauren too, who's one of our listeners, and notified John that we were talking about it as well. MNKD has been one that John Najarian has been all over here. So Najarian brothers looking at option flow have been all over this one. So congrats, John, if you're listening.
And this stock has been a perennial dog, and then it's just had this monster run. These are daily candles, folks. It's come up from the $1.50 level. The news that got it going was just a change on the labeling for Alfreza, and that's an inhaled insulin. Larry points out that there's another company that's coming out with an FDA approval for an insulin pill. So, I mean, I don't know. I mean, it's had a great run. It's over tripled. And then the analyst hopped on it yesterday. I believe someone started covering it. So, big move in Mankind, which has been a perennial dog here. I think you can go to the charts. It was go to the monthlies and go back far out. Let's see. All-time high in Mankind, 121.55, and I don't think they've had any reverse splits at all. Dennis, any imbalances? Do we have any sell imbalances today in GE?
We've got a mix, actually. GE, yeah, of course we do. GE, 285,000 to sell. That is significant there in GE. Knocking it down even further, I would be surprised this takes out 23 here today. I mean, I've kind of been bearish on the show here for a while, even despite this is my best portfolio. Again, talking against my book, which I've been doing in GE for a month, keeps going down here. Maybe I should have just been shorting into my trading portfolio or something. But anyways, GE, 285,000 to sell, so another big seller in there. Those sellers have been right in GE. Colgate, 74,000 to buy. That was upgraded here today, so that's the reason Colgate is showing a big buy and bounce this morning. Nike, 78,000 to buy. Stock we haven't talked about for a while here. Nike has been trying to find support. The only thing that's been hanging out here so long that I start to get concerned. When a stock hangs out near support and doesn't bounce off and just kind of sits there, I get concerned that it could eventually take it out. Well, Nike this morning does have a buy and balance of 78,000 shares, but is still trading down in the pre-market. So 51.45 is where it's at right now. Thoughts on this one as it kind of hangs on support?
I mean, we always talk about when it doesn't get away from, support, that it's more likely to blow through it. This is just, I mean, now if you're leaning on 51, then you got to give yourself to 48.9 or 48.5, because it's just too, like, having your stop or getting out below 51 is just too logical of a place, right? Because you've had all those lows there. So 50, now this is a weekly chart in it. It's building support. This is where it's bounced from, going back all the way to August of 15. But man, longer it sits here, the longer you think it's just going to bust through.
Yeah, I'm not loving that chart there either. Jumping over here, Pfizer, 45,000 to sell. Alibaba, 45,000 to buy. Alibaba is made a new high again yesterday. I mean, the stock is just a monster. So that's the one we've had right, Joe, because we've been bullish this thing ever since it had that gap up in the earnings, and it's been moving up. It's moved up 40 points since we've been bullish it. We should have both had this one and not been thinking about it.
There was someone in the chat a while ago that thanked us for having it, and I don't know who it was. I still hope they have it. But we only have 2 minutes here, and I just Fuzzy here is throwing a stock in, just looking for perhaps breaking out in AERI. And let's just look at the chart because I know absolutely nothing. Pharmaceutical. News. Is it news?
Up 13%. There's some headlines. Spencer?
Yep. They had one of their drugs, one of their therapies was effective in a preliminary FDA review.
Very effective, apparently. Up 13% here this morning, getting a nice lift over all those tops there. This all-time high?
Oh, by far. The former all-time high was made in September at 61.30. You just got a 63.50 print here, so I would use that as a target on the upside. I think if it came back down below 61.30, which is pretty good likelihood, there's a lot of air on the downside here in Erie Pharmaceuticals, AERI. All right, Spinner's telling me Mankind did have a reverse split 4-for-1. So news on that. S&P's just hanging out here, mid-range on the session. I'd like to see, for this market to continue going higher, I'd like to see a new all-time closing high sometime this week. That's 25.50. Average range down in the S&P is down to 10.5 points. So low volatility here bodes well for continuation of higher prices. All right, Spencer, 8:59. You want to wrap up the show and preview Thursday's docket?
Sure. On the docket for tomorrow, we have two guests for you. Mark Shakin will be on the show. He's going to talk about what he's seeing in the market and preview his webinar he'll be hosting tomorrow afternoon. And then Richard Lester will also join the show. He's a new guest. He is from across the pond. He's from DRS Markets. He's going to give us his view of the markets, U.S. equities markets, from over across the pond in England. So excited to talk to Mark and Richard on tomorrow's show. As far as today's show, you can catch it again on our podcast at iTunes, SoundCloud, and on Stitcher, and also by going to youtube.com/BenzingaTV. Don't forget to like us on Facebook as well at Pre-Market Prep there. Have a good rest of your day, folks. Good luck out there. We'll be back with you on Thursday.